It is confusing. We all know as consumers, we're Americans, we understand there are inflationary pressures, people are cutting back a bit, but it seems to be hitting certain people more than others. Take us through what the calculus is, what's in store for McDonald's.
Yeah, thanks, Tom. Good to see you. What's certainly been the case so far is sort of the lower end consumer pulling back, right? I think you've had some of those concerns spread more broadly. The reality, you just mentioned Chipotle. Chipotle had a very good quarter, but even in their case, we've seen a bit of slowing as we went from the end of 1Q to the end of 2Q. And so I think the reality is people are being picky, and there is a broader slowing in the restaurant industry here. Not falling off a cliff, but a broader slowing at this point.
And we saw the same thing play out to a derivative degree, right, with Lamb Weston, which is one of the biggest frozen potato suppliers to many restaurants across America. You can think of names like quick service names, McDonald's, others. What exactly do we then read into some of the Lamb Weston supply chain side of whether the slowdown has legs?
Well, for example, McDonald's is Lamb Weston's biggest customer, right? If we think about McDonald's reporting today, we do expect they're going to post negative same-store sales growth this quarter, right? It's going to be a tough quarter, probably the toughest since COVID hit. So you've seen that pullback there. I think people understand this quite well at this point. But look, I'm expecting that the current quarter is going to be off to a slow start too, and we'll see pretty broad weakness across a lot of our fast food coverage, and their results sort of speak to that.
What exactly does that mean then for McDonald's overall as a stock, as an investor? Am I worried about what's going to happen there? Is there a level of safety? Is there a level that I should say McDonald's feels like it's a good value or a bargain, the stock and not the food that they serve?
I think we're around that point, right? And I think you've seen the stock stabilize because of that. Like I said, probably a tough 2Q, probably a tough 3Q, but we've been pretty optimistic that they can reassert some of that value advantage. They've no doubt lost some of that edge, right? But we do think that they can regain that. And as you go into later this year, as you go into 25, our house view is not that there's going to be a recession. So we think that through that $5 meal and probably other strategies to continue, they can regain some of that value advantage, and then the stock will start to work.
Brian, for your coverage universe, there are a number of names you look through across the income spectrum. Is there a top pick that you see, given the fact that your economic outlook isn't so dire and that maybe there is a little bit of a value trade to be had in some of these names?
Well, McDonald's is certainly one we like. We still like Domino's, right? We think that Domino's is still posting traffic growth year over year. It was a little bit below expectations when they reported a couple weeks ago, and so the stock responded to that. But still growing traffic, still think they have kind of a value advantage. Frankly, now that the stock has reset it, but we still think that it sets up pretty well into later this year and into 2025. So that's one that we've liked, certainly.